Hello and Happy New Year. Welcome to RegFacts. I'm Lori Peterson, Senior Regulatory Compliant Expert here at Mitratech's Continuity. 2023 ended with a flurry of regulatory activity, so let's get started. There were several final rules issued to update asset thresholds. The CFPB amended regulations M and Z to increase the consumer lease and consumer loan thresholds from $66,400 to $69,500 for calendar year 2024. So that means effective of January 1st of this year, transactions above those thresholds are exempt from the disclosure requirements. The HML appraisal threshold was increased from $31,000 to $32,400 for calendar year 2024. Transactions that are equal to this amount or below that threshold are exempt from Reg Z's appraisal requirements for HPMLs. The asset size used to exempt creditors from the requirement to establish escrow accounts for HPMLs and for determining small creditor status for portfolio and balloon payment qualified mortgages increased to $2.64 billion for 2024. The HMDA asset size exemption threshold was increased from $54 million to $56 million to 2024, meaning that institutions with assets of $56 million or less as of 12/31/2023 are exempt from collecting and reporting HMDA data in 2024. The OCC, Federal Reserve, and the FDIC increased the CRA asset thresholds to define a small bank as one that has less than $391 million for either of the two prior calendar years, so 2022 and 2023. And then an intermediate small bank would have equal to or greater than $391 million in assets for both of the two prior calendar years, but also be less than $1.564 billion for either of the two prior calendar years. While the regulations don't specifically define large bank, it can be inferred from the regulation, and a large bank would be one that has greater than or equal to $1.564 billion for both of the two prior calendar years. That's with all of our asset size threshold changes. The Federal Reserve also amended Regulation D to reflect the annual indexing of the reserve requirement exemption amount and that low reserve tranche for 2024. Those adjustments are required by statute, but there's no effect to an institution's reserve requirements. That remains at zero. The FDIC adopted a final rule to implement a special assessment to recoup the cost to the Deposit Insurance Fund for covering uninsured depositors of Silicon Valley Bank and Signature Bank. This final rule becomes effective on April 1st of 2024. The NCUA is also amending its methodology for computing the annual operating fees that it charges to federal credit unions. That asset threshold will increase from $1 million to $2 million and will be adjusted annually based on the aggregate asset growth of all FCUs. The NCUA also plans to analyze options to adjust cost distribution in the future. The Farm Credit Administration adopted a few rules. One was a final rule to require each farm credit system institution to implement a comprehensive written cyber risk management program that's consistent with its size, risk profile, and complexity of its operations. That final rule isn't effective until January 1st of 2025. The other FCA rule that became effective 12/23 of last year updated, restructured, and reorganized regulations that govern the appointment of the Farm Credit System Insurance Corporation as the conservator or receiver of farm credit system institutions. FinCEN issued several different items relating to the beneficial ownership information reporting rule that became effective January 1st of this year. They did amend that rule to extend the initial filing deadline from 30 to 90 days for foreign and domestic entities that are created or registered in the U.S. as of January 1st, 2024, but prior to January 1st of 2025. That's to give those entities additional time to understand this new reporting obligation and then to also collect the information that's required to be filed. Entities that are created or registered on or after January 1st of 2025 would then only have 30 days to file their reports with FinCEN as required under the original rule. The OCC issued a bulletin to provide banks with risk management guidance for buy now, pay later lending, and it expects its banks to engage in this type of lending to do that in a safe and sound manner provide for fair access to financial services, support fair consumer treatment, and of course, comply with applicable laws and regulations. The FFIEC announced that CRA disclosure statements for 2022 are available, and banks that are large banks need to have that information in their CRA public file. The NCUA issued accounting bulletin to communicate a technical correction for credit unions that adopted CECL in 2023 and have them use a specific method to calculate and report their CECL transition amount. FinCEN worked with the IRS to issue an alert to warn financial institutions about fraud schemes related to the COVID-19 employee retention credit. The NCUA proposed a rule and requested comment on their methodology that they use to determine the overhead transfer rate, which is applied to the NCUA's operating budget to determine the portion of the budget that will be funded from the Share Insurance Fund. And while the NCUA did provide more clarity and detail and transparency to enhance understanding of this methodology, there were no changes proposed. The FDIC issued a proposal to provide guidelines regarding corporate governance and risk management that would apply to all insured state member banks that have total assets of 10 billion or more. The FDIC has extended the comment period on that proposal until February 9th, 2024. The FTC is proposing to add a new section to prohibit unfair or deceptive practices relating to fees for goods or services by omitting mandatory fees from advertised prices and misrepresenting the nature and purpose of those fees. The comments were originally due on January 8th, but the comment period has been extended to February 7th of 2024. Both the FDIC and the NCUA proposed changes to their regulations to conform with the Fair Hiring and Banking Act rules. The FDIC's comments are due on 1/16. The NCUA retained their comments due date of 1/8. The CFPB also proposed to establish a new part to their regulations to implement Section 1033 of the Consumer Financial Protection Act. And this proposal would require that depository and non-depository institutions make available to consumers and their authorized third parties certain data relating to consumers' transactions and accounts. It would also establish obligations for third parties who access that information to ensure that they maintain privacy standards, provide basic standards for accessing data, and they also want the rule to promote fair, open, and inclusive industry standards. Sadly, we also had a couple issuances from the FDIC regarding helping victims who were affected by storms in Tennessee and Illinois. FinCEN also extended to 2025 the FBAR filing deadline for certain financial professionals. They also updated their BOI FAQs a couple times. OFAC issued Global Magnitsky Sanctions FAQs, or actually just one. The OCC also announced its 2024 fees and assessments structure. The FDIC updated its compliance exam manual in November of 2023. The FDIC also sent out post-exam surveys that will be used in 2024. The FFIEC released the second version of its 2023 data entry software for use for those CRA reporters. And that is our recap of a very busy month. Take care and have a nice day.